Welcome back to Explain the Charts, your go-to source for in-depth market analysis and practical trading insights, where we strive to decode market mysteries and empower your trading decisions. Today, August 14th, 2025, we're embarking on a comprehensive deep dive into BTCUSD, meticulously analyzing both the latest breaking news and its intricate reflection in the raw chart data, providing you with a holistic view. Bitcoin, notorious for its extreme volatility and rapid price movements, has once again been at the absolute epicenter of market activity, proving its dynamic and often unpredictable nature. Just yesterday, on Wednesday, reports indicated Bitcoin surged to a fresh record high of $124,496, an incredible milestone that captured global attention, with Ether also closely approaching its own 2021 peak, showcasing broad strength across major cryptocurrencies. This impressive rally was initially propelled by a cooler-than-expected July inflation report, significantly boosting investor confidence for potential Federal Reserve rate cuts later this year, acting as a powerful risk-on trigger for the entire financial market and crypto alike. However, the market sentiment shifted abruptly today, Thursday, demonstrating how quickly narratives can turn and immediately impact asset prices globally, underscoring the importance of staying informed. Bitcoin experienced a sharp pullback after July's wholesale inflation data came in much hotter than anticipated, leading to widespread selling pressure across the digital asset space as traders adjusted their expectations for monetary policy. Further compounding the bearish turn, breaking news confirmed the US Treasury Secretary has explicitly ruled out new Bitcoin buys, a pivotal development that quickly pushed the price below $119,000 just hours ago, highlighting acute regulatory sensitivity and potential government influence in the crypto market. Despite this immediate setback, the broader crypto market continues to see strong underlying support from heavy institutional buying, ongoing tightening of Bitcoin supply, and increasing corporate adoption, fundamental factors that propelled Ether to surpass Bitcoin as the crypto market leader since June, boasting an impressive 85% gain. The recent launch of ATHs, a new no-friction trading app with real-time data and alerts, also points to growing infrastructure and accessibility within the crypto space, which can be inherently bullish for long-term adoption and overall trading volume, regardless of short-term dips. This constant interplay of macroeconomics, regulatory shifts, and technological advancements keeps the crypto market vibrant and complex for traders. Now, let's transition from the headlines to the charts themselves to investigate precisely how these crucial, interwoven events are manifesting in the actual price action of BTCUSD and what they might signal for both the immediate and distant future. Shifting our focus to the one-day chart, we gain a panoramic view of Bitcoin's journey over the past year, revealing key structural formations and market dynamics. The overarching long-term trend clearly points upwards, demonstrating a robust recovery from the significant lows observed in the $49,000 to $56,000 range during August and September of 2024, a testament to its long-term accumulation and resilience. Bitcoin has consistently carved out higher highs and higher lows, establishing new price plateaus after each period of consolidation, forming a discernible uptrend channel that investors favor. A particularly pivotal level, which previously acted as formidable resistance, was the $99,000 to $100,000 range, a ceiling tested multiple times in late 2024, signifying strong supply there initially. Impressively, this round number has since flipped into a remarkably strong support area, as evidenced by several bullish bounces throughout early 2025, confirming a bullish structural shift and strong demand below. An additional layer of structural support can be identified around the $80,000 to $85,000 mark from the February-March 2025 period, acting as a historical reaccumulation zone for astute bulls looking for value. The most recent market thrust has propelled Bitcoin into entirely new, record-breaking territory, indicating strong speculative and institutional interest driving prices higher. The final candle on this daily chart for August 13, 2025, shows a strong bullish close at $123,320, with a high of $123,380, largely confirming the reported new records right up to that point in time. However, a critical caveat here is that this specific chart data concludes at the very end of August 13th, UTC, which is crucial for our real-time analysis. Therefore, it does not yet fully encapsulate the immediate, sharp impact of today's August 14th US Treasury news and the subsequent reported price depreciation below $119,000, which will appear on the next daily candle. This gap between our current data and the latest headlines highlights the rapid pace of market reactions and the immediate need for real-time information and quick adjustments. Let's narrow our perspective and zoom in on the daily chart, specifically from July 1st, 2025 through August 13th, 2025, to dissect these very recent price dynamics and understand their catalysts. Within this focus segment, we distinctly observe Bitcoin initiating a powerful upward rally, starting from approximately $105,920 at the beginning of July, indicating renewed and aggressive buying pressure. The standout large green candle around July 9th to 10th, indicative of a significant price surge from roughly $108,932 to $116,031, directly aligns with the positive inflation report and surging market optimism, a clear cause-and-effect correlation. This sustained bullish momentum culminated in the price peaking at $123,231 on July 14th, and further reaching $123,380 by August 13th, decisively confirming the news of Bitcoin hitting fresh records and the strength of the rally leading into today. Notably, the increase in trading volume accompanying these price surges signifies robust buying interest and strong conviction at these elevated levels, providing confidence in the upward move. While our data doesn't yet show today's full decline, the presence of smaller red candles and upper wicks near the recent highs suggests some initial profit-taking and increased volatility, which is a natural occurrence following such a substantial upward move, signaling potential exhaustion among early buyers. This period vividly illustrates the market's heightened sensitivity to macroeconomic announcements, with inflation data serving as a direct catalyst for pronounced price shifts, making these reports crucial for informed trading decisions. Observing these quick reactions and concurrent volume shifts is absolutely key for anticipating short-term reversals or continuations of existing trends. Transitioning to the 1-hour chart provides a more granular view of the short-term price action leading right up to the current trading day, offering invaluable insights into intraday patterns and immediate market responses. Across the past few days, Bitcoin has largely been consolidating near its recent all-time highs, oscillating primarily within the $118,000 to $123,000 range, suggesting a persistent battle between active buyers and sellers. We can discern distinct patterns of tight trading ranges interspersed with sudden, sharp bursts of activity, particularly evident during the late hours of August 13th, where price attempted another upward push before the day concluded, indicating last-minute bullish fervor and attempts to break out. This shorter time frame is invaluable for understanding the immediate volatility that active traders must skillfully navigate, often requiring quick decision-making and precise execution. Immediate key short-term resistance is identified just above the $123,000 area, representing the most recent peak achieved prior to the breaking news of the current day, a critical level to watch for potential rejections or strong breakouts. Conversely, reliable support on this hourly chart can be found around the $120,000 psychological mark, with a deeper floor established at $118,000, a level that consistently held firm through late July and early August, showing underlying strength and buyer interest. The fluctuating volume profile on this hourly chart, characterized by pronounced spikes during rapid price movements, is a classic indication of robust liquidity and active participation in a highly traded asset like Bitcoin, often suggesting institutional presence and high-frequency trading. To microanalyze the very latest price dynamics, let's now examine the 15-minute chart, capturing the final hours of trading just before our data cutoff, revealing immediate market sentiment and microtrends. This ultra-fine granular view reveals intricate movements, with Bitcoin making a determined, albeit final, push to the upside in the moments leading up to midnight UTC on August 13th, suggesting last-ditch buying efforts by bulls. The specific candle from 2342 Universal Time coordinated on August 13th records a high of $123,644.04, precisely confirming the peak touched before the market could fully react to today's significant news, marking the absolute highest point in our available data. This chart is indispensable for short-term traders seeking precise entry and exit points, as it vividly exposes immediate supply and demand zones, allowing for nimble and tactical trading strategies. The rapid and pronounced shifts in individual 15-minute candles underscore the high frequency and sensitive nature of Bitcoin trading, demonstrating immediate reactions to even minor shifts in sentiment or incoming information, emphasizing the need for real-time data feeds. For active day traders, the ability to observe and interpret these patterns around pivotal psychological levels, such as the $120,000 area or newly established swing highs and lows, is absolutely paramount for successful tactical decision-making, allowing for quick adjustments to market conditions. Synthesizing all our observations from both the news and the charts, let's formulate a comprehensive short-term and long-term outlook for BTCUSD, considering all available and interwoven factors. For a bullish short-term scenario, we would critically need to observe Bitcoin swiftly recovering from today's reported dip, ideally re-establishing the $120,000 level as a robust support zone, indicating buying resilience and a rejection of lower prices. A rapid and sustained bounce from this current pullback would strongly reinforce the prevailing narrative of escalating institutional adoption and Bitcoin's inherent market resilience, potentially propelling the price back towards the recently touched $124,500 all-time high in the coming days. Considering the consistent underlying institutional interest, the ongoing tightening of Bitcoin's supply, and an increasingly positive regulatory environment in general, a retest of previous all-time highs appears quite likely, perhaps with a 70% probability, assuming broader market conditions remain constructive and further severe negative macroeconomic shocks are avoided. This bullish momentum, if sustained, could carry Bitcoin well past the $125,000 mark in the midterm if these favorable fundamental and technical conditions persist and reinforce each other. However, a bearish short-term scenario would unfold if the price decisively fails to hold above the critical $118,000 level, and especially if the subsequent $115,000 support breaks with conviction and increased selling volume. Such a breakdown could easily trigger a cascading sell-off, with the recent news of the US Treasury ruling out new Bitcoin purchases serving as a potent catalyst for further declines, amplifying fear and liquidations across the market. In this event, Bitcoin could potentially retest the significant psychological support at $100,000 or even retreat towards the $80,000 levels seen earlier in the year, representing a substantial short-term correction and a potential buying opportunity for long-term holders. A breach below $115,000 carries a roughly 40% probability given the gravity of the recent negative news and could signal a deeper short-term correction, particularly if accompanied by increasing selling volume, suggesting strong bearish momentum is taking hold. Therefore, key price levels for all traders to diligently monitor are the immediate overhead resistance at $124,500 and the crucial support zones at $118,000, $115,000, and finally, the foundational $100,000 psychological mark. Beyond the charts, market participants should assiduously track forthcoming inflation reports, any new Federal Reserve policy announcements, and ongoing regulatory developments pertaining to digital assets globally, as these often drive major moves irrespective of technical patterns. The overarching market sentiment, coupled with the continuation or cessation of institutional capital inflows, will be the most significant determinants of Bitcoin's price trajectory in the coming weeks and months, often overshadowing minor technical fluctuations. As always, effective risk management remains paramount in this volatile market, and remember that while technical charts provide a valuable framework, fundamental news can shift the landscape rapidly and unpredictably. So stay informed and trade responsibly.